Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Hello. Good morning, everyone. This is Kathy. If you can hear my voice, see the screen, say hello. Let me know that you are here and you're hearing me loud and clear. Let me know. Hello, my friends. Can you hear me? Can you see me? Thank you so much, Andrew, for letting me know. Good morning, Snowmag, Martin. Thank you so much. We have so much to talk about this morning. Between what's expected on the calendar, along with this craziness that we have in the markets today. So, there's a lot to cover, but I did want to do the sound check, make sure everything is working properly. Wonderful. Thank you, Peter. Thank you, Denise. Thank you, Dale. DAHC and North Star. Good morning. All right. I got some banners in here, which I want to remove. I don't know why it's still here. Let me see if I could remove the banners. All right. I think it should remove in just a second. Hopefully it has. I can't really see it on my end for some reason. My StreamYard's acting up a little bit. Okay. Looks like everything is working. All right. So good morning, everyone, and welcome to our live stream. As I said, we have a lot to talk about this morning. Let me know what you want to hear about. Let me know what markets you are watching. Type into the chat box, and I'll be sure to cover them this morning because, as I said, there's so much going on right now, and there's so much going on in the week to come. So we have a lot to cover. Yes, the S&P, the NASDAQ, those are moving a lot. And, we had talked in the past about how the rally in the dollar and the rally in stocks, for that matter, really would not be threatened until, something came out from left field. And, the news that we had this morning, I wouldn't say that it's from left field, but the news about DeepSeek, certainly, some people anticipated this, but there were many others who, were surprised by this. And I have, a question from David, and I'm actually curious to know how many people don't know what DeepSeek is. How many people want to know what DeepSeek is? If you don't know, say, maybe put a question mark. If you don't know what DeepSeek is, give me a question mark. Otherwise, I'll assume that most of you know what DeepSeek is. And I'll give you a minute to type in. Yes, we'll talk about Colombia, DeepSeek, all of that is definitely in the headlines. Oh, wonderful. I love to see that so many of you don't know what DeepSeek is, because this really gives me an opportunity to talk about it. So, Yes, just as another open mutant has told us. The biggest story right now this morning is that DeepSeek is causing the sell-off in NASDAQ, NVIDIA, S&P. First of all, it's causing the sell-off in NVIDIA, which is leading to sell-off in the NASDAQ, which is leading to a sell-off in the S&P, and then the US dollar. All of these things are tied together, and all of these things are related because NVIDIA is one of the biggest companies, is one of the biggest tech companies, and so their sell-off is leading to sell-off in NASDAQ, a sell-off in, and the sell-off in NASDAQ is leading to sell-off in the S&P and the Dow, and that is leading, and as money comes out of the U.S. stock market, that is leading to sell-off in the U.S. dollar. We also have U.S. Treasury yields down quite a bit today. And I think that's a really big story that U.S. Treasury yields are down, let me see, almost 2% at one stage. U.S. Treasury yields are now down 1.75%. So that is a pretty big deal as well. So, what is DeepSeek? DeepSeek is basically China's alternative to OpenAI, to ChatGPT. And the reason why it's in news today is because, number one, DeepSeek actually shot up to the top of Apple's App Store, and they are, basically basically it shot up to the top of Apple's App Store chart and is the biggest downloaded app over the weekend. I'm just looking at my headlines here just to make sure that I got everything. Yeah, I mean, they're basically one of the most downloaded app over the weekend on Apple's App Store. So, this, in some ways, I said that this is inevitable. And the reason why I say that is because, one of the greatest threats that the Trump administration has on China is that they would take away some of this technology access. And so China is, left with very few options. And they usually resort to what they know best, which is how to do things faster and cheaper. And that's what they've done, or that's what they claim that they've done with DeepSeek. DeepSeek is basically, they claim that they built DeepSeek for under $6 million in just 2 months, which is remarkable considering that, it cost, what are these numbers? Sorry, I'm looking at these numbers I had earlier. That it costs, that the U.S. government and the U.S. tech firms are planning to spend $300 billion on OpenAI this year. And that some of the AI, like the one from Meta, costs like $500 million to build. So $6 million is, a lot cheaper. In 2 months is a lot faster. And so, this is scaring the market, because it means that, first of all, maybe there doesn't need to be so much spending on AI. And even if there is, it seems like, China could be running circles around us, and that this will shake up the entire AI supply chain. And then on top of that, they reported, I'm just looking at my headlines this morning, they reported that in some third-party studies, their version outperformed OpenAI. That based upon, they launched a reasoning model that, according to third-party tests, outperformed OpenAI's latest iteration. So it's smarter, it's faster, it's cheaper. I mean, this is why NVIDIA is selling off. And the sell-off in NVIDIA is raising concerns for all of those tech companies where they're planning their future on AI. So that is why the equity market is selling off. That is why NVIDIA is selling off. That is why the US dollar is selling off, because maybe there doesn't need to be so much investment into DeepSeek. Does that make sense? If it does, give me a thumbs up. If you're still confused, give me a question mark. Let me know. If it makes sense, give me a thumbs up. If you're still confused, give me a question mark, and let me know if you got a much better sense of what DeepSeek is. And AI is driving the future, so that is why it's so important. Now, It seems like, let me double check, stock futures are kind of off their lows. This morning when I woke up at the start of the New York session, they were down 400. Dow futures were down 400 points. Now it's kind of down 300 points. At some point, it was down 290 something points. So it is off its lows. But I think when the market initially opens up, you typically have a flush through. And when we have the flush through, that could lead to a further sell-off in stocks and sell-off in the dollar. But I think you may have some bottom pickers come in. And this is certainly going to capture the market's attention today and part of tomorrow. But Wednesday is when things get kicking. Even Tuesday night is when things get kicking with data, when we really focus on what we were supposed to focus on this week, which is the outlook for the Federal Reserve, the outlook for the ECB, the outlook for the Bank of Canada, along with a lot of other data that we have. The rate decisions aren't the only things that are driving the markets this week. And in some ways, it is argued that some of the other reports, like the GDP reports, could be more important because we already know what these pieces of data are going to do and, what these central banks are going to do. But, the key this week is not so much what the Fed and what the ECB and what the Bank of Canada does, but more about what they plan to do in the future. And that's what we call guidance. And that's what we're going to spend more time talking about today. So from the US, we have a lot going on. And just give me one second. I'm just kind of grabbing my calendar here. So we have a lot going on from the US. And you can see, let me show you my heat map. I'm going to share my screen. Give me a second. And you'll see that my outlook is still positive for the dollar. And it's positive for the dollar. And I think there'll still be bottom pickers that come in to buy the dollar as we look to see what the Fed says about interest rates in the next few months. So the Federal Reserve is, just to throw it out there, the Federal Reserve is not expected to cut interest rates. It's a pause. They're going to plan as a pause in their rate cut cycle. The ECB and the Bank of Canada are both expected to deliver 25 basis point interest rate cuts. So that divergence is going to happen. And there's a very good chance that that divergence could be confirmed and more pronounced, particularly for the euro, because the ECB is not just planning one interest rate cut. There's planning, as the market thinks they're going to give us 100 basis points of easing this year. So 100 basis points of easing, where the Federal Reserve, if we look at our Fed Fund futures, and we always like to look at CME Fed Fund futures, you can see this, the market's pricing in a 97% chance of no interest rate cut this year. But let's go to the summer, June. So in June, the market's pricing in basically a 78% chance of a interest rate cut by the Federal Reserve. So the market's pricing in a good chance of the interest rate cut by the Federal Reserve by June. But a full interest rate cut isn't really priced in. The market's really just pricing in. If you look at this, right now the rates are 4 and 4.5%. The market isn't really pricing in a good chance, I would say 90%, until October of this year. So the market realistically in its mind is only pricing in one fully pricing in one interest rate cut this year. And I think we may see that we click to December. Yeah. So someone's off, right? It's either going to be the market being off or it's going to be the Fed being off. So, I am bullish dollars because the Fed's going to pause, but this is more like neutral bullish, because I think that the Fed is going to leave interest rates unchanged. They're going to confirm to us that everything is data dependent and that they haven't made their mind yet. They're certainly not going to comment at all, even though there will be a press conference. They'll be asked questions about what they think could happen with the tariffs, what could happen with OpenAI, what could happen on immigration and the impact on prices. I think they're going to stay relatively quiet on that because it's too early to say, but they are going to commit to their 50 basis point interest rate cut. Because if you think about it, there's really no downside, right? But let's take a look at how the US economy changed since the last Fed meeting. This is my table here. Hold on. Okay. So this is my table here. And whenever we look at interest rate decisions, we always like to put ourselves into the shoes of the central bank, to try to think like what the Federal Reserve could think like. And the way to do that is it's quite simple. You think you need a PhD in economics to do this, but you really don't. All you need is some Excel skills and, trading economics, which basically gives you all of the historical data. So what I've compiled here is is a table showing how some of the most important U.S. economic reports have changed since the last Fed meeting in December. So it's only been a month, but we did have quite a few economic reports. And you can see, first off, retail sales, consumer confidence are lower. So Americans are feeling a little less confident and they're spending a little less. The labor market still seems to be holding up pretty well. The unemployment rate improved. Non-farm payrolls is up a very decent amount on 256,000. Inflation is neutral. And this is a piece of the puzzle that's very important for the Federal Reserve, which is that, consumer prices, the headline level, first of all, is still hovering around 3%, which is where they're not really all that comfortable with, because year over year CPI, if you look at the monthly report, that actually increased from 0.3 to 0.4. Core CPI dropped from 3.3 to 3.2. But year over year CPI rose from 2.7 to 2.9. So inflation is still sticky. Inflation is still a problem. And how much are you guys paying for egg prices right now? Type into the chat. I just paid $9 for a carton of eggs. Granted, they were organic and farm fresh, and the hens were treated better than the ones in cages. They were free range hens, but still, I spent $9 on a carton of eggs. I'm assuming North Star, you said $4.59, $8 in California. This is a consequence of a couple of things. One, it's a consequence of, the bird flu, obviously. It's a consequence, of how the bird flu is leading to fewer chickens and to kill them off. And so the prices are higher. But it's also a consequence, and I think we're going to see more and more of this, of Trump's policies. It's a consequence of some of these farms. They were raided by ICE, and they were looking for illegal immigrants. And so as a result, a lot of these farms either have to shut down or they have to fire those workers, bring in higher wage workers, and all of that is contributing to higher egg prices. Martin, how much are eggs in the UK? I mean, $9 for eggs is pretty expensive, I think. And I can't imagine you spend more than $9 for eggs, even if it's in British pounds. But yes, we're going to see more and more. This is not just about eggs. I mean, eggs are something a lot of us use every day, but it's also and it's also affected by the bird flu, but it's also affected by the immigration crackdown. And I think you're going to see more and more of that. And so this inflation piece of the puzzle is going to worry the Federal Reserve. And that is why I think, they're going to say that they're data dependent, and they're not really going to suggest that it's not going to really suggest that they're going to be too dovish or too hawkish. $4.99 for eggs, and 18 eggs in Boston. Okay, yes, they're not organic, but my farm fresh eggs, the yolk is so yellow that I just can't buy anything else. Oh, Martin, for 6 eggs, that's not too bad. Chocolate has gone through the roof. You're absolutely right. Chocolate really has gone through the roof, and the bars are getting smaller. One of my closest friends works for Mars, and they're struggling to find, chocolate at better prices. So yes, prices are rising, and prices are going to continue to rise, not just for eggs, for a lot of different things. And this is going to worry. I think this is a trajectory that the Fed sees, and this is a worry for the Federal Reserve. And that's really expensive. BGP, 6 free-range eggs in Portugal for €5. I mean, that's pretty much, well, I guess they're free range, right? So that's not too bad either. Or it's pretty much basically what I paid, a little bit more. Anyway, back to this table. My point is that inflation is here to stay for some time, not just because of the egg and the bird flu, but also because of Trump's practices, immigration crackdown, which could lead to higher wages and higher prices. The housing market seems to be improving. NAHB housing market index is doing better. New home sales are doing better. Manufacturing and service sector activity is doing better. Stock market, except for today, is mostly up. So for the most part, the U.S. economy is mostly better compared to where it was at the last Fed meeting. So if at the last Fed meeting, they already suggested to us that they're going to pause, and we've seen, mostly more improvements than deterioration in the U.S. economy since the December meeting, then and plus this inflation is becoming an issue. Yes, I mean, shrinkflation is it. I mean, I think that the producers thinks that we're stupid if we don't see it. We don't see shrinkflation happening. And so if you were the Federal Reserve, you have no reason to really ring the bell about the need for aggressive easing. Because first of all, stocks are still near record highs, even with today's sell-off. Last week, they had record highs. So if I was Powell, and I think, we've got the right mindset here. I think, I've kind of laid out the story here for all of you, that if we were Powell, we'd probably say, let's just keep an eye on things. We are leaving interest rates unchanged. Inflation is still sticky, and there's maybe some areas that could cause some concern about inflation that we just talked about. And, labor market is still strong. The labor market is still good. And so we're just going to watch the data. And the question now is, as traders, is that going to be positive or negative for the dollar? We are going to watch the data going to be positive or negative? I think that first off, a pause in itself is positive for the dollar, because the Fed, this is not going to be, in my opinion, a 1 month pause. It's going to be a few month pause, unless, of course, something comes out from left field and we have like a 3,000 point drop in the stock market. It's just going to be it's going to be a few month pause. And the Federal Reserve themselves don't really know how many months constitutes a few months. So it's going to be a few months pause, and they are going to watch the data. They're going to see, because Feb 1 is the date that Trump said tariffs could be imposed on China, Canada, and Mexico. But then, I think there was some report that suggested that the report to Trump about trade practices abroad is due in April. So the could be kicked down the road to April. Regardless, all of that tells us that the Fed should be in wait and see mode. So if they raise interest rates and they just say 50 basis points are coming, if they leave interest rates unchanged, that's going to be dollar positive. If they say 50 basis points is still coming, we could see a little bit of a drop in the dollar because the market is pricing in only 25. Remember, we looked at the Fed fund futures, but I think the dollar is going to snap back. I think people are going to sit back and realize, nothing new was said, and the Fed is just in wait and see mode. So if that happens, the game plan would be to buy dollars on dips. So that's the Federal Reserve. But that is why I said that the Fed meeting and the guidance is important, but we've got a couple other things going on. We also have on Thursday, the first release of Q4 GDP. And the first release of Q4 GDP, the market is looking for growth to slow. So that could be more important because we really don't care about the revisions to GDP. The market doesn't really move that much on there. The market only really cares about the first release of GDP. And so that's what we're getting on Thursday. It only moves on the advanced release. So if we get GDP slightly weaker, maybe we can sell off a little bit. And then on Friday is the main report, in my opinion. Friday, we get, if we look at the calendar, you'll see that Friday, we're just going to go. Okay. So Thursday is when we have the advanced GDP. Market's looking for a slowdown from 3.1 to 2.7, so quite a dramatic slowdown. I think there could be a bit of an upside surprise. But the main report, I think, is going to be core PCE, which is another inflation measure. So Ab wants to know, how do I calculate the verdict? I mean, it's just my opinion. The verdict is how many more reds and greens do we have? When we have a lot more greens, it's bullish. When we have a lot more reds, it's bearish. It doesn't need to be more sophisticated than that. You could do it yourself. So this is going to be very important. So we've got a market moving day on Wednesday. We've got a market moving day on Thursday. We've got a market moving day on Friday. And this PCE deflator, I think, is expected to be stronger. And that could help the dollar. So in a nutshell, what I'm saying is that if we look at the dollar, let's just pop on the dollar index, all right? We look at the dollar index. It certainly looks like it's topped out. I can't help. I mean, like, it's itching for a fib, right? And the fib is no coincidence where this breakout former support, you can see this, 106.32, which is kind of far away from here. Not really, you know, we could see a little bit more drop in on the dollar index before we actually end up finding some support. But dollar yen has more support around 153. We see that. Well, now it's broken below current fib, but the 200 SMA at 153 is going to be a bit of significant support. So you noticed in my heat map, I'm bullish dollars, but it's really neutral bullish. And I think I might switch this back to neutral because while I do think that the dollar will not sell off a lot, we could get a little bit of a front of week sell-off off of the dollar that leads to some support where, you know, buyers will come in for dollar yen around 152.75, and then for the dollar index around the 106 handle. Okay, so next up is the ECB. With the ECB, they are widely expected to cut interest rates by 100 basis points. Let's look at the ECB chart. So let's remove this. All right, so this is the ECB. Let's look at this. I'm going to take a sip of my coffee. I'm going to let you answer my question, which is there more green or red? Please put your answer in the chat box. Is there more green or red on this table? I want this to be an interactive session because I know that you're paying attention, that you are absorbing this. Do you see more green or do you see more red? Yeah, green. More euro bullish, which is kind of surprising, right? Because the ECB is gearing up for an interest rate cut. The market thinks the ECB is going to cut interest rates by 100 basis points this year. So the market is looking for a very aggressive easing by the ECB. And yes, last quarter, Q4 was terrible. There's a lot of deterioration, especially in October and November. They're in political crisis. There's a whole host of problems towards the end of last year for the Eurozone. And you see that in the November data. And German retail sales was down quite a bit, down 0.6% after falling 0.3% the previous month. We also have Eurozone retail sales, Eurozone confidence weaker as well. And German unemployment increased a little bit, but not really all that much. For the most part, we do see more green than red. We see in the last week, we had improvements. And the PMI reports from last week in general, the PMI reports in general are, in my opinion, the most important pieces of data because they are the most, quote unquote, recent pieces of data that we get. Because if we look down here at the PMIs, they're for January. So they're the most recent piece of data. So we have more green than red for the economic data since December. Now, I do not think that the ECB is going to pause. The ECB is not a central bank that likes to surprise the markets. They like to prepare the markets. So they've only been telling us one thing, which is interest rate cuts are coming and they need to ease. So I definitely think they're going to cut interest rates by 25 basis points at this week's meeting. But the guidance and the comments from ECB President Lagarde may not be all that pessimistic. She may express, most importantly, for all of these central banks, she may express concerns about inflation as well. She may express concerns. I mean, they're not going to like the fact that German CPI went from 2.2 to 2.6, which, 3% is the 2% is the where they want to see inflation. 3% is kind of like the pain point they really don't want to get back to. So it's heading up, not down. No one's going to be happy with that. So the comments from ECB President Lagarde may not be that dovish, and they may not be that pessimistic. So Euro has rallied. Where's my Euro chart? Euro has rallied, and it's broken to the upside. And for those of you that are trade with us, we've been watching. Where's my arrow? Let's see. Okay, we've been watching. This pink line is the 5 SMA. The yellow line is the 20 SMA. The blue line is the 50 SMA. The red line is the 100. The green is 200. You can see that over here on my nav bar. So we love to look at these SMA crosses. One of my videos on YouTube is on the SMA cross, and when the 5 SMA, which is the shortest SMA, crossed above the 20 and then later to the 50, these were all potential new breakouts in the uptrend, and we're seeing that in the Eurodollar. Eurodollar has resistance up here. That's the next resistance level at 106. ECB is not until Thursday. We have FOMC on Wednesday. So there is, a good possibility that we could see strength today, further strength today in the Euro, further strength tomorrow in the Euro. And then Wednesday, Federal Reserve isn't until 2 o'clock. So further strength on Wednesday in the Euro that could potentially get us to this 106 level. So, Euro. So even if the ECB cuts interest rates and the Euro ends up, selling off of that, I think we're going to go up here, followed by, maybe a little bit of a move down there, depending upon what the guidance is. But I think it's going to hit resistance up at 106. And, these SMAs matter. I actually just put a video out on my perfect trade setup on YouTube that explains how I love to, one of the things that I really like to look at is moving average clearance. And moving average clearance is what gives us the breathing room to go to the next level. And that is exactly what, I think that we should all be looking for, because, the moving average clearance is exactly what I'm talking about here, where we have moving average clearance, all the way up to 107, but we have to recognize that there's some resistance over here at 106 as well. So we have the ECB rate decision. We have, and I know it says bearish because this is where the monetary policy direction is generally speaking, but I think we're going to see some strength before we see weakness in the Euro. We also have Eurozone GDP numbers, which that is going to be a problem. Eurozone GDP numbers, I think, is going to be weaker because Eurozone GDP, I think, is on Thursday. Yes, German GDP on Thursday, that's expected to be weaker. We had the IFO report this morning from Germany, which was slightly better. So, these numbers are showing a little bit of strength. And but the GDP report, I think, is going to be weaker as well. And then we have the Bank of Canada rate decision. So putting ourselves into the shoes of the Bank of Canada, the Bank of Canada is also expected to cut interest rates by 25 basis points. Now, the Bank of Canada has actually been one of the most aggressive central banks last year. They were one of the central banks that cut interest rates the most last year. And they are still expected to cut interest rates by 25 basis points this morning. But I think that they're going to tell us that they're going to start to wind down. Now, if you look at this table, there's just as much green as there's red. So we can't say that there's been a significant amount of acceleration in Canada's economy. I mean, yes, retail sales jumped in the month of December. Labor market has been hot in Canada. 90,000 job growth, and 57,000 of which is full-time, with improvement in the unemployment rate. Now, inflation is falling, which is a problem for Canada. And of course, they're being faced with tariff threats, just like another mutant commented about Germany. German cars are dying. Yes, and that plus the fiscal problems and the government collapses in Germany and France is something that will worry ECB. I'm just sharing my opinion, but of course, there's a lot of concerns. But for Canada, there's been a little bit of improvement. I think they're going to remain dovish. They're going to leave further rate cuts on the table. But I also believe that, with the government changing, Trudeau is expected to step down in March. I don't think there's going to be any real revelations, but I think they're going to cut interest rates and either suggest that they're slowing down rate cuts or not change their comments at all. So, this is going to be a bit of a wild card because CAD, what's interesting about dollar CAD is that it hasn't really moved. It's just been consolidating. Look at this. I'm going to remove my drawings. Oops. I meant to remove the drawings. Let me put back my moving averages. It's just been stuck in this huge range up here. So it's been stuck in this huge range up here. And, it isn't going anywhere. And, we're not seeing anything with dollar CAD at all. So it's consolidating and we're not going anywhere. And it's itching for a breakout. It's itching for a breakout, trying to figure out where is this breakout coming from. And so it's unclear. It's, BOC could be Bank of Canada rate decision, could play a role in this, or it could be just the Fed or something like that. But right now it's stuck in a range. And data from our table is also, just kind of 50-50, right? It's just as more greens as there's red. So I think we could have a really significant breakout in dollar CAD this week. My prediction is that it's going to be a downside breakout, but the tariff headlines are risky. They're volatile. It can go either way. So it could go up, but my bias is going to be the downside for dollar CAD. In terms of data from Canada, aside from the BOC rate decision, we also have GDP, we also monthly GDP report on Friday, which could be a little stronger. If you look at the monthly GDP report on Friday, you can see, the market space is a little bit weaker on a monthly basis. But I think with retail sales and trade improving, this number could be a little bit stronger. Last week was a huge week for the British pounds. Bearish British pounds. Last week was a huge week for British pound. British pound is rallying. We did see some improvements in PMIs, but for the most part, UK data has been kind of weaker. So I think we may see the peak in the rally, and we may actually end up seeing a little bit of weakness there as well. Although sterling, really, to be honest, sterling is not in play this week. Sterling is completely related to what's happening in the US dollar. So if the US dollar sells off, sterling is going to rally. If US dollar rallies, sterling is going to sell off. Keep an eye on US yields. Keep an eye on US yields because, that will be important, which, but for the most part, I'm really surprised. I think my watch list on my PC is all messed up because US yields are actually down almost 2% this morning. The actual rate is fine, but this is not a 0.4% move. Anyway, and it kind of looks like a head and shoulders here. But with sterling, it's purely based upon the market's appetite for US dollars. There's absolutely no UK data this week. And then for many of you are asking about the carry trade. So I'm going to refresh this. Let's see what happens. I think my watch list is going to refresh, hopefully. Yes, wonderful. So yes, all of the yen crosses are lower this morning. And so let's talk about carry trade for a second. There are three conditions for carry trades to perform well. One, which is that investors are optimistic and the markets are rallying, which we do not have today. Investors are nervous, the markets are selling off. Number two is when central banks are raising interest rates, which is not happening. Everyone's in rate cut mode for the most part. And number 3, when we have volatility low. And today, volatility is high because traders are nervous and we're in a Trump regime. And one of the things that we really think is going to happen this year is higher volatility. So those are the 3 things that need to happen for carry trades to work. For carry trades to sell off, let's flip that on its head. Number 1, stocks need to be selling off. Investors need to be nervous. Is that happening? Yes or no? Are stocks selling off? Are investors nervous? Give me an answer. Should be a, let me look at my chat box here. Should be a yes or a maybe that stocks are selling off. Number 2, are central banks in rate cut mode? Yes or no? Yes, central banks are in rate cut mode. Number 3, is volatility increasing? Let's take a look. Even if it's not, you can get a sense that, markets are getting a little bit more volatile. I mean, yes, this is the VIX. The volatility's jumped up to 22. So yes, yes, yes on the conditions for carry trade to sell off. So who was just asking me that question, which is a great question about carry trades? Who is our MVP asking the question that many of us are wondering? Can't seem to find it right now. I think Scott said, I like the carry trade unwind. Another mutant said the carry trade's dead. So if you want to know, is the carry trade alive or dead? Just ask yourself these 3 questions. Are stocks falling? Are central banks in rate cut or rate hike mode? Or, and is volatility rising? And if the answer is yes to all 3, then carry trades will continue to sell off. When people are optimistic, that's when carry trades do well. Yes, Japan raised interest rates, but they're the anomaly, not the norm. Another mutant. And yes, VIX is not that bad, but keep an eye on it. It's rising. It's not falling. So these are the things that we need to watch to see, to answer the question of whether carry trades are rallying or falling. So right now, I'm yen bullish. I still think that yen's going to rally. I still think that, a lot of these are in the zip sell zone right now. And they're deep in zip sell zone territory. Now, of course, a lot of that happened during the European session with the stock market sell-off. But I think, they're headed lower. Aussie and Kiwi. So Aussie, CAD, Kiwi, I'm all neutral. We do have an Australian inflation data this week. So one of the things, I do want to talk about Aussie for a minute because all last year, they left interest rates unchanged. But this year, they're bringing us interest rate cuts. And the question is, when is that going to happen? When is it going to start? And the answer to that will lie in part to tomorrow's inflation report. Where's the calendar? Tomorrow's inflation report from Australia. Tomorrow's inflation report is expected to show inflation rising. So if it does, great. Aussie will bounce, and we won't be talking about rate cuts right now. But if the inflation surprises to the downside, and we did have lower inflation expectations, commodity prices have come down a little bit. If that happens, then that's going to be a problem. That's going to go into, if inflation surprises to the downside, we're going to be talking about interest rate cuts from the RBA. So tomorrow night's report from Australia is going to be very, very important. From New Zealand, we really don't have much going on. From Canada, we already talked about how we have Bank of Canada rate decision. From Switzerland, we have only the, I think, Swiss retail sales report. Is that true? We have the KOF on Thursday. So maybe it's only the KOF. Oh, retail sales. Yes. Swiss retail sales on Friday. So we do have a few pieces of relatively important Swiss data that is worth watching. So definitely tune into those because that's all interesting. But the main reports are going to be FOMC, ECB, Bank of Canada, the GDP reports from Eurozone, from the US, the PCE deflator from the US, and the Australian inflation reports. Those are the most important pieces of data on the calendar. Now, I've got a question about dollar Brazil, dollar real. we don't really trade the real, but I think it's interesting to just talk about it in general. We can look at this. Okay. Let's get this as a line. I think it's gonna remove all my indicators. All right, this is the dollar real. All right, so can bring the candles back for a minute. No surprise, emerging market currencies are selling off right now. And the dollar is rallying against emerging market currencies. Now, if the dollar sells off, we could see a pullback down to 400, 420, 400. But I think we're going to see. I think there's more downside than upside in the near term for emerging market currencies like the real. By the end of the year, I think it's going to be firmer. I think we're going to be down here in 380 mark by the end of the year, but it's a long road from now. And I think there's going to be more uncertainty before some stability. Do you think the yen will keep strengthening? I think that the sell-off in stocks definitely changes things. So I'm neutral right now, but I think that I'm more bullish than neutral. So when the charts change, when the news change, it's time to change the heat map as well, which I didn't do this morning because I was busy doing everything else, some other things. But I will update for the BK traders the heat map later today and share that all with you. All right. So we talked about a lot, and there's going to be a lot to continue to talk about this week. Are there any questions? Boris is not joining me today, but I hope I've given you guys a good understanding of what to expect this week. And I hope you enjoyed and found today's session valuable. If you did, please like this video. I appreciate it. And if you've got a question, feel free to fire away. Any charts that you want to look at? If Putin speaks with Trump to stop the war with Ukraine, is that positive or negative for the dollar? I think it's going to be positive for the dollar. It's going to be positive for the dollar because it means that we're going to see a little bit. Well, it's going to be positive for dollar yen and bearish for the dollar against the euro. So it's going to be positive for euro dollar, negative, positive for dollar yen. So euro yen, because the war in Ukraine affects the euro area the most, especially in costs, and especially since they are expected to shoulder more of the burden under the Trump administration. It's going to be very positive for the euro. I don't actually, honestly, I have no idea where Boris is. I think he had a family emergency this weekend that he left for, and I haven't heard from him at all. So I've got to check in on him. Usually he's very, very responsive. So I've got to figure out what's going on with Boris, but he is not here with us this morning. How to avoid getting killed by spreads on the crosses? Well, trade during the liquid times trade during the liquid times. That's the best thing I can say. Trade during liquid times, and there are brokers. Our favorite broker for non-US is ACAP, and their spreads are pretty competitive. So, you definitely want to look for them. Any other questions? I am yen bullish right now because of the latest developments that we had in the markets. And I think we're going to see a little bit more continuation in that front. So I am going to update the heat map for BK traders. Have I covered gold? I have not. Great question, Alicia. I did not talk about gold at all. Gold is pulling back. Gold is pulling back even though the dollar is rallying. Some people think that gold is a safe haven currency, and that it should rally when stocks sell off. But it's not true. You can see today that gold is trading lower. And I think that, I think we're going to see a pullback in gold. But I think, you're going to see buyers come in around the 2,700 mark in gold. Can I explain my ZIP strategy a bit? Sure, I'd be more than happy to explain my ZIP strategy. I also have a video, though, that explains it. Let me just share the video. I'll share my video in a minute. But basically, for some reason, my charts are lagging. All right. So the way the ZIP strategy works is, I don't know what's going on with my charts today. So you know what? I'm just going to drop the link. You can see that my indicators are not pulling up for some reason. So I'm just going to drop in the chat. the link I actually have a video. And this weekend, oh, there it is. This weekend I had explained, I created a whole bunch of videos. All right, hold on. What is ZIP? Okay, so basically the way ZIP strategy works is that when the background, so I only use ZIP on 1 hour charts, and we've done very well. We've had 100, our target is 100 pips a week, and every single week this month, we've exceeded our 100 pip target. So when the background, so basically what I've done is I've made this visual, so it's easy to see, easy to read. When the background is green, it means that the longer term trend is bullish. When the currency pair, in this case, the Eurodollar, is trading above the indicator line, it means that the short-term trend is bullish as well. So we want to buy when the long-term trend is bullish, and we want to make sure that the short-term trend is bullish as well. So we want to buy when the short and long-term trends are bullish. These white candles are the ZIP buy signals. So this is actually a signal to buy, but it's not the only setup that we trade. We trade the ZIP buy signal. We also trade the early ZIP, which I saw in one of the yen crosses. I don't want to bring it up because my charts are taking forever to load. But this is the ZIP buy signal. And when we see 1, 2, 3 triple ZIP, it's an even stronger signal to buy. Now, we only trade ZIP during the active market hours, which is why I always say I trade on the New York Open and the Asia Open, 6:30 a.m. New York time and 8 p.m. New York time. So this is actually this is right around the 9 p.m. candle. So just at 8 p.m., Euro is rallying, and it's beginning to rally. And this was on Thursday. It's beginning to rally right at the Asia Open, forms the ZIP buy signal, and this is a classic ZIP buy trade in the Eurodollar, where you see we get the ZIP buy signal and we get a classic ZIP buy trade. So here's a setup in dollar yen. This is now this we did get a buy signal here, but this wasn't a trade. It was too late. When we come in at 8 o'clock, we're right down here. So we're actually in the sell zone. Now you could argue, maybe you should try selling it, but you could also wait for the New York Open, which there was no setup there either. This is 10 a.m. That's not a setup there. This is after the session. Let me see if we have anything in dollar Swiss. So this was at 7 p.m. last night. So if we're here, so you just basically, if the background's red, it means that it's bearish. Look for opportunities sell when it's trading below the indicator line. Look for, and you get the ZIP sell signals. These are the signals to sell. Now, to be honest, I do not trade. If you look at, I do not trade Sunday evening, Monday morning, because the results are 50-50, and I like odds that are like 70 to 80% accuracy. And so we only trade Tuesday to Friday, and we also don't trade ahead of major event risk. So we'll be trading tonight. That's how we maintain the high accuracy on ZIP and maintain the results that we get, by being selective and only trading during the right times of the day. And I actually talk about that all in my YouTube video, and how, what the trading setup, my perfect trading setup. And I'm going to paste that in here right now. My perfect trading setup. And you can watch all of that in here. All right. Any other questions? Gold sell. Dollar yen has support at 154. I mean, that's probably true. A little bit. I really see support down at 153. We can look at the 4-hour charts to see. Same story. I don't see support at 154. Gold sell is not technical around major resistance. Well, I mean, it is double top, right? So you could sell. And if we ends here, if the low today is lower than Friday's low, then it becomes quite bearish, especially if we close below the 5 SMA. So I think it could be a possibility. RGP, if you're interested in ZIP, just click on that link. What is that? Where it is, what is ZIP? And you can get more information there, especially on how to access it. Was last night yen intervention? I don't think so. I haven't heard reports of, it does look like the price action could be, because if you look at this, but I think it's more coincided with the sell-off in U.S. yields and stocks than yen intervention. So I don't think so. Any other questions? All right. If not, Zip is for MT4. Zip is for TradingView, but I think they have an MT4 version. I'll have to check with Boris because I honestly trade on TradingView. All right. If you learned something from today, give me a green heart and let's hope for profits this week. And, you know, I'll be hoping for profits this week. We'll be looking for profits this week. If you enjoyed today's session, let's share that green heart and, you know, happy Chinese New Year for all my friends on here that celebrate it. And, you know, let's hope for a good trading week. Yes, I will hunt Boris down and see what's going on with him because he is usually not completely MIA. I'm sure everything is all right. All right. Thank you so much. Thank you, Martin. Thank you, another mutant. I will definitely be checking in on Boris and find out what's going on with him, why he hasn't checked in at all. All right. Have a great trading week, BK traders. I'll be updating heat map, sharing with you, and we'll be trading tonight. I will see you all in the markets.